So now we're getting to the nitty-gritty stuff, which is things that we really want to take in consideration for when it is that we are trading in the forex market. So with that being said, let's get to it. Now over here we can see how market is either moving up or moving down, and it's very important for us to understand market structure, because market structure is what allows us to know the overall direction in the market. Now before we get into any of these charts, I want to go ahead and just do a quick summary. A bullish market is going to be an upwards market that goes ahead and creates higher highs and higher lows, meaning that every single time market moves higher, it's making a higher that is higher than the previous high. So as we can see right here, and every time that it comes in and creates that low, it's going to be a little bit higher than our previous low. So in this case scenario, that is why we consider this a higher low, because it is higher than our previous low, and this is a higher high because it is higher than our previous high. So it's very important for us to consider what market is doing at the overall major highs and what market is doing at the overall major lows. And next time it does a run to the upside, is it really creating another major high? Is it equal or is it less? If it is higher than the previous high, then that is considered already creating that overall bullish market structure. And when we go ahead and see that the new low is higher than our previous low, as we can see in this case, then in this case we are already considering that overall bullish market structure, and that will allow us to understand that there is a potential continuation towards the upside. Now that we understand that market is considered by higher highs and higher lows when we are on a bullish market structure, which an abbreviation of that case would be a higher HA for higher high and HL for higher low. Now let's go ahead and see what would be the exact opposite for a bearish scenario. So in this case scenario, we see market moving down, moving up, moving down, moving up, so on and so on. What is important for us to take in consideration is going to be this right here, which is going to be the overall high points in the market, as we had gone ahead and spoke about previously, and is also going to be this right here, which is going to be the overall low points of the market. Considering that market is moving on a downwards trend, considering that it's moving down and continuing on moving down, then we are going to be considering that every single potential step is creating either a lower high, and the reason why we go ahead and place the L first, it's for lower, and the H second is because it's our high. Understand that the overall trend is lower and lower and lower. That is the reason why we go ahead and place that L first for lower high. And also when we go ahead and see that market is creating this low, this is considered a lower low. So as a lower low, our abbreviation is going to be LL. Understand that since we are in a downtrend, we always go ahead and start with the letter L or with the word low, and then continue as market structure is going ahead and developing. So when market moves up and we are still on that overall trend, which we can consider a bearish trend, we are going to continue with that lower low abbreviation and lower high abbreviation. In this case, this high is lower, okay? This high is lower than our previous high, as we can see, and that is why it is a lower high. This low is lower than our previous low, and that is why this right here is going to be considered as our overall lower low. So it's very important for us to understand that market structure on a bearish case scenario is going to be distinguished by lower highs and lower lows, and will continue on doing so over and over repetitively. And on a overall bullish trend is going to be confirmed by market creating higher highs and higher lows. Understanding that the overall abbreviation for this market structure, since we are on a bullish trend, we start with the letter H, which is also considered as our higher low in this case, because this is going to be our low, that we can see right here. And over here in this section, since that is a high that is higher than the previous high, we are going to go ahead and abbreviate this as HH for our higher high. So with that being said, guys, I wanted to go ahead and just go straight to it for you guys to understand what market structure is. This right here is the overall concept of market structure for a bearish scenario. In this case, this right here is going to be a bearish scenario, and for a bullish scenario, which in this case, this is going to be a bullish scenario. I hope you guys like this quick, easy video. As always, like, comment, subscribe. It really helps out the channel, and I will always go ahead and go straight to the point. That way you guys don't have to waste your time. Let me know down below exactly what it is that you'd like to see next. And as always, continue the following video as well, so that way you guys don't miss out on this mini course. See you guys next time. Have a great one. Bye-bye.